Good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is for Thursday, the 21st of February, 2019, and we're about 3:40 p.m. Central Standard Time. So, a big down day in the metal markets. After the size rally we had, why not? In addition, for those of you that last week came to my webinar, remember that those dates that I showed, and by the way, that webinar is still up on the website if you wanted to go view it. I had pointed out that 21st to the 23rd is where gold often gets a peak in its short term, according to the more research, and you get opportunities on the pullbacks. It's just what seems to be happening. Now, I was on today Fox Business News, and one of the things I told Liz Klayman, I said, Liz, what about the buy the rumor, sell the fact? So this market has been going up in anticipation that something will happen between the Chinese and the U.S. You've now got your final 2 days of negotiations going on. The market thinks there'll be an extension. The market says there's 6 memorandums that have come out and things are going along a good path. But how much of that is into a 12% rally in the stock market since Christmas Eve? Why not get a pullback? Doesn't mean the trend is over. Pullbacks. As we go to the gold chart, you can see how this market has rallied, and for the week, you're still up $3. When you look at the daily chart, the market had come up, broken out of this, pulling back at this point, and the swing line is still one of a lower low and a higher high. I hate these vertical price rallies because where do you put in a stop if you buy? You're going to go back and put it under this low? Doesn't make sense to me. The reason I say buy, so you'll know, is because when a market is over the 18-day moving average of closes, I immediately have a bullish bias. When it's trading under it, I have a bearish bias. It's that simple. It's a filter for me. So I start thinking in that way. Where's the support in the market if it keeps breaking? Look at the 18-day moving average. That should be an area that offers it. I don't think it's the 100. It's so far away. What's going to break the gold $60 right now? Something can happen, but I don't see that on the horizon immediately. I see resistance. Take a look at the upper Bollinger Band. The market got up to that number, and what I teach is when you get up there, I think the pros take some money off the table. And I think that's what occurred, and now the question is, what do they do on this break? On this break, you had gotten, if you'll take a look, overbought. The readings got up to an 87 with the other number, the K and the D line being the dark line, under 80. That means you just had an overbought condition. What's the odds of staying over an upper Bollinger Band? 5% of the time. And as you do it in succession, I take out of that 5% each successive close and subtract it from the 5%. And the logical question is, what happens, Ira, on the 6th day? And I go, what can you do? You're 6. Doesn't matter, because what I'm saying to myself is, I think I can get into the market on not over a Bollinger Band at a better number. Just think of it that way. I'm also not seeing a trend. I've got a lower and low, higher high. We know the market is thrusted. We know the market, if we come back to this chart, has been running to the upside. So don't get me wrong. But when you're using the leverage of futures, you're always looking to see what about right now. Because a day like today, if you're in gold at $22, is a heck of a lot. It's $2,200 on a contract. Got that? When you look at the slow stochastic reading, you can see that the market's pointing down, which means price and the 18-day average are probably going to come together. That's the probability, and then we'll see if the market develops a trend. The same thing happened on the GLD ETF, and I realize up here when you get this, because I was one of you at one point, that is where traders are jumping out. The brokers are telling people it's gone, it's not coming back, gold's on its way to 1400. Yeah, whatever it's doing. Typically that's where the market is overbought, oversold, and that's just what happened, and the market's pulling back. Unlike the futures, this market is stronger than the futures. It's got the higher lows, higher highs, so I would expect that this market sees a stab by the bulls at the 124.38 level. If you take out 123.53, it's back to the drawing board for the short term. In GDX, you hit the upper Bollinger Band finally. Now, you kissed it, tried to, on this day. You got up to 2326, 2328's number. For all purposes, you were there on Tuesday. You made good measure of it yesterday, and today you pulled right back, and with an overbought condition, momentum is now starting to turn down. So more of a price correction, and this chart looks more like the gold futures than it does actually the ETF of GLD. In the gold-silver ratio, I'm still going to keep April gold, March silver, but I don't think you trade March silver anymore. I think you start moving to the May now. Open interest and volume are going to move there. You still have this pattern where you've broken down, found support right here, and you still haven't had silver gain on gold. And you see that pretty clear here. Now, we had looked at this market coming up, and I am certain that if, you know, I had the March silver, but they would trade just the same. I'd be looking for resistance up here. The market gives it to you yesterday, and it pulls right back to that 18-day average today as it's regrouping. And that's what I think you're doing. I think you're regrouping in this market. Momentum, getting back out of an overbought condition. Copper, I'm moving to the May copper now. You know, I wouldn't tell my clients to trade March anymore. Now it's May. But you've had this pattern of a lower low, higher high. This is a market that's up obviously on hopes that great things will happen with China, the U.S. There's been major investment banks that have come out and thought that copper would go up 14% from these levels, and so far they look pretty good on their call. We're overbought and in the first stage of trying to keep both numbers over 80. But to get both numbers embedded, you first get overbought. So you're in an overbought market against the upper Bollinger Band. I wouldn't even know how to enter this market. In the platinum, I see resistance between the 100-day average and the upper Bollinger Band in an overbought market that is not trending. Lower low, higher high. It set up a broad swath of trading. That's what I see there. And in the palladium market, just keep your eye on this red line. If it closes under 80, it probably signals that in the March palladium, you're going to see some selling. It's the next month. There might be a roll going on where they get out of the March into the next active month. That's probably what I'm going to expect. In the dollar index, the whole break carried from the Bollinger Band high, ultimately, and you were running it right here with the market that was embedded. You lost this embedded reading. We were then looking for price in the 18-day average to make a run at each other. It did it yesterday, and today you have a small bounce. Doesn't mean that we're through. And in fact, the close under 96.12, a close, the end of the week, would be very bearish, this market. You'd have lower highs, lower lows under the 18-day average, and that would have momentum pointing down. If this all sounds Greek to you, it shouldn't, because one of the things I do is I teach, and I love teaching. Each morning at 8:30, I put out a video that you don't see in the public. You're not going to see it on YouTube. You're not going to see it on somebody else's website. I control this one. And in this one, my charts will look like this, and I'm not in it. I'm talking in it. I'm going to review 40 charts in a very certain manner. You're going to ideally sit down, have your cup of coffee, have a finger, because you might want to drag the bottom. Maybe you don't want to cover all these markets, but I do. And by doing so, I start instilling into you, ideally, how do we call this? A regiment, a learning skill, putting it together and giving you ideas what these numbers have. You will learn these numbers. And what they are is I'm going to talk chart action, what I think the pros, the active traders, are doing. Technical and fundamentals. Example, today, Chinese trade deal, $30 billion of grain that they want to buy right now on top of what they bought last year. I think that's a good fundamental. 6 memorandums of understanding. I think that's a fundamental you should know about. I can go on and on. So I'll mention these as we're going through it, and then I give you the juice. The trade ideas, and I will throw out day trades, position trades. I'll even say, hey, maybe this is where you throw on option ideas, and we'll talk about those. Seasonality, they'll come in here each morning. So the idea is, if you're like me, I wanted somebody to talk to when I began trading. Those people aren't really around. But you get a guy like me, and you're able to see this, and if you have your own trading idea, maybe I either solidify it for you, maybe I turn you away from it, whatever it is, but because you're not talking to me, you're at least seeing it influences it. And that's the idea here. Now, Every 2 weeks or so, I have a live webinar. You're welcome to come in. As a subscriber, you can always call me. Be more than happy to talk to you. I know people don't believe that, but if you leave a name, number, as soon as I get a moment, I will return my calls to my subscribers. How do you do this? Give us a call. You can go to our website under Education or Research. Everything you want is right there. Just click on it, away you go. It runs about 26 cents a day to get involved. I don't think that's charging you too much. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.